All right, take two, and we're live with another Workshop Wednesday with School of Bookkeeping. Now we're also joined again by our friend over at Avalara, Travis, because we'll be continuing our series on sales tax fundamentals, and today we'll be unpacking where do you sell. So we talked a little bit about Nexus. We talked a little bit about what do you sell and who do you sell it to. Now we're going to talk about the where, three main components of sales tax itself. But one of the things I wanted to mention, we forgot last time, for those of you that are watching us, please share this on your social media channel of choice, and in the comments put in where you did it, and we will enter you into a drawing for an exclusive School of Bookkeeping shirt. So at the end of the month, we will spin the wheel of fun, and we'll have a live on the workshop. So we'll have a winner. So Susan Humphreys is definitely in the lead for the amount of times that she has. I'm going to share this here. For the amount of times that she has shared it, but if you want to try to wrestle it away from Susan Humphreys, you can do so by sharing the YouTube or the web page, wherever you share it to. Just put in the comments where you did, and that will enter you into the drawing of the wheel of fun.
We always like to have fun,
right? The exclude, yeah. What do we say, Carrie? We put the FU in fun.
As we do.
All right, so we are continuing. You may notice that my background keeps changing. I am in, where in the world is Dan today? I'm actually in Phoenix, Arizona, and for some reason, the business center that I'm in here, they have the heat on, so it is terribly warm in this business center, and I'm buying all this machinery that is emanating heat on top of that. So if I start sweating, what? I'm not nervous. I'm just really hot in this enclosed room. So we're going to continue our discussion with Travis about the three main components of sales tax, and then next week we'll break out some of the water cooler sales tax, weird, wacky, wild things that he's maybe come across with the uniqueness of sales tax, because gosh, at Avalara, that's you live and breathe sales tax, right, Travis?
I do. For the past 5 years now, I personally have been living and breathing sales tax. So.
Yeah, one thing that I noticed, some states, and it really just depends on the states, why do they call it something different? Like Arizona, since I'm in Arizona, they don't call it sales tax; they call it the transaction privilege tax. Why?
Oh, yeah.
Why do they call it different things? Yeah.
Yeah, I mean that's a good question. I think some of these states, I would probably have to talk to someone from our compliance team to get down to the root of like why they call it, TPT in Arizona versus like franchise tax in Texas versus, some of these other states. Right. And different names for it. But at the end of the day, that's their transactional tax compliance. That is their, form of sales tax, which, for us, I actually got that question recently, and that's a standard tax return that we do for folks, is that TPT in Arizona. So
yeah, I mean, it sounds so elitist, right? Like, oh, this is this
yeah,
is your privilege.
it's a
It's
privilege
your
for you to buy this item and pay us pay the government sales tax on it, right? Yeah. So
all right, and then the government entities that the tax agencies that you have to pay it to, like, what is it? California, what, the State Board of Equalization, and then
yeah.
Arizona is the Department of Revenues. Like, it's never consistent
Yep.
between one one or the other. But it all
Yep.
boils down to, like you said, it's going to be their transaction sales tax, unless you're in those nomad states, right?
Right.
Not nomad like moving. That's the what is it? It's the
So
five
it's
states
new.
that don't.
Yeah. So it's 5 states. That's the acronym, Dan. So good job. Yeah, it's the nomad states. So that's the easy way to remember it, right? But it's basically, so there's only 46 states that have a state administered sales tax, or if they call it something different, just that transactional tax, right? But the 5 states that don't have that would be New Hampshire, Oregon, Montana, Alaska, and Delaware. I think that's why there's a lot of startups incorporated in Delaware, because I don't think they have corporate income tax either. So that's a great state for getting out of paying tax. But yeah, that's a that's a good way to think about it. And then I think Alaska's on there. They're kind of weird because they do have like a locally administered sales tax. But at the end of the day, yeah, those are the nomad states. Those are the ones that you generally don't have to worry about, even if you have Nexus there.
So then, now let's talk a little bit about, like, where you sell, right? So we talked about
Right.
Nexus, when we first, started this whole topic, because that is there's a component of physical presence, and then there's a component of economic presence. But this gets a little bit deeper when you're talking about, like, where do you specifically sell? Where is that transaction actually occurring? When it comes to some types of businesses like field service, where they have inventory, selling parts on the truck, and they're delivering things, and then actually that it's taking place at a customer's home, or if you're selling things online and it's you're shipping to.
Yep.
Talk a little bit about some of those complexities when it comes to where transactions are actually taking place, and what is the responsibility of a business.
Yep. Great question. So that's something that really, it comes back to the South Dakota versus Wayfair case, and how that decision on economic nexus has completely changed the game, because now, you don't, as a business, you're not determining where you have nexus anymore. It's not only, where you have physical presence, where you have that fixed place of business, or, if you're selling something tangible, where you're warehousing product or have property, where you have employees or payroll, right? Now your customers determine it. So you have to be aware of, it's based on how much product you're shipping into a state, or if you're service based, if you're selling software, services you're providing into a state. So to your point, anything delivered into that state is counting towards that state's economic nexus threshold. And then let's say you already have nexus. Yeah, I mean, you're going to be collecting based on wherever that, if it's going to another state, meaning interstate commerce, you're always going to be collecting based on wherever that destination is, where that product or service is being delivered, is the rate you're going to calculate, and that's where you're going to collect and remit if you have
Well,
nexus, right? So,
unless you're in California, right? I mean, is that the only state that has source and destination, or are there other states that have that as well, right? Like when you're doing it within the state.
yeah, I think California may be the only state that has that funny rule where it's like, hey, they are an origin-based state, but you're still collecting based on the district that you're shipping to. Yeah, it's crazy. California's, not
Complicated.
necessarily on the list of what we call the nightmare states, but they're up there.
Oh, okay.
Yeah.
Do you have an
Yeah.
acronym for the nightmares? Does it say like
No, there's no acronym, but I'll just tell you, a couple of the states on that list
Colorado,
are
right?
Colorado, you got it right, and Louisiana. Not to get off topic, but that's just not only are you collecting based on the specific jurisdiction, but you also have to file separate returns for. In Colorado, they call them home rule cities, right? So you're filing the state level return for everything you collected at the state rate. And then everything you collected in Denver, Steamboat Spring, like what have you, right? You're filing a separate return, and for Louisiana, it's the state return, and then the parish level, right? So those are what makes those the nightmare states. But there's still, those states like California and New York, like, obviously it's not fun generally dealing with those guys.
Well, I mean, and I always go back to a friend that I had that worked at the Arizona Department of Revenue. She gave me an example of, in just in Arizona, there are over 500 jurisdictions just for that one state. And when it comes down to the topic that we're talking about, where do you sell? It's up to the business owner to know. All right, if I sell it out of my business, it's one jurisdiction. But if I take it on a truck and deliver it to my customer, it's another. It could potentially be another jurisdiction, right, Travis?
That's correct. Yeah. So like, if you're in a destination based state, it's going to be it's always going to be based on where it's being delivered, even if it's inside the same state, right? You're needing to collect based on wherever you're delivering that product, wherever that your customer's located, or if you're service based, wherever that job is, right? And then like whenever we're talking interstate commerce, it's always going to be where that product or service is being delivered. But we do have some of these states which are origin based, where it makes it a little easier. You're just collecting based on where you're located, right? So.
What states are origin based? Off the top of your head, you don't have to rattle them all off, but just some of the more common ones.
Off the top of my head, I believe so. Texas would be an origin based state. Gosh, that's a tough one. Yeah, I would have to get the list.
That's why you have things like Avalara to know all those things.
Yeah.
Based off of those,
at this point in my career, I've probably forgotten more than what I actually know. So,
all right. So, and that brings up like an interesting point. Like I remember, seeing some other demonstrations from Avalara with the Colorado. That it was actually next door neighbors were in two different tax jurisdictions. So it can't be something as simple as like the zip code or something like that. It could potentially be one person is one tax jurisdiction and the next door neighbor was another. And those are the nightmare type of situations.
Yeah. So great point, Dan. So that kind of circles right back around to Colorado, and like why we have so many customers that maybe they only have Nexus in Colorado, but they still need our help, right? Because that's a great example. You can be in the Denver area and you walk across the street and you're in a different taxing jurisdiction and it's a different rate. So there can be 4 or 5 different boundaries or rates, in that same zip, which, I always tell people, hey, like zip codes, those are for delivering the mail. They don't, for a lot of folks, that's the best way for them to calculate sales tax. And, generally it'll get you close, but, there can definitely be some complexities there.
Yeah. Now, Carrie, I've been monopolizing the conversation. Anything that
I'm just glad I'm in a state that's not that complicated. They call it Department of Revenue. They call it sales tax. But yeah, one of the things that we rolled into just this week was, setting up our sales tax. You have to be real careful if you're brand new and small to, don't just sign up. You got to watch what buttons you pick, because they're suddenly saying you need to file all these returns, and we don't even have sales to do. So that was kind of a sales tax headache that we received this week.
Yeah, so we'll have to take care of that. So, was I going to? There was a question that I was going to ask Travis, and it went away, and I hopefully it'll come back. But any other thoughts that you have, Travis, about where items are sold that people need to really be aware of? So takeaway here is that if you're in Colorado, don't
Yeah.
try to do sales tax yourself.
Yeah. So that's a great point. There's not a lot of people that want to try to tackle it manually there. But I would say fundamentally, like, the first thing you need to look at is nexus. Like, okay, if I'm a growing company, right? Which a lot of these businesses that are on QuickBooks are, that I work with, are fast growing, right? And they're trending towards hitting economic nexus thresholds. And that's all about, hey, how much product are we shipping into the state, or how much, what do we sell in services? Are we getting close to these thresholds? Are we passing thresholds? So that's the first question, is like, hey, have we hit nexus yet in this state based on what we're shipping or services we're delivering in the state? And then if so, hey, well, now we're at a point where we need to get registered and start collecting, because we do have a sales tax obligation there now.
But that brings up an interesting question. So once you cross or pass that economic nexus threshold, how soon do you have to do you have to go back once you pass it? And then is there a grace period that the states will have?
Yeah, good question. And the answer to that is with most things, sales and local taxes, it depends on the state, right? So like most states do give you sort of a grace period, right? So some states say explicitly, like, hey, you're able to register 30 days after, passing the threshold, or 60 days. So, a lot of times I do have people that are worried, like, hey, do we need to go back? Do we need to do back filing? Well, not if you're on top of it. So if you register relatively soon after passing the threshold, you should be in the clear, right? You don't have to worry about a whole lot as far as like any uncollected sales tax, or having to go back and back file, or worst case, voluntary disclosure agreements. So, depending on the state, it could be 30 to 60 days. So that's why you just want to be on top of it, so you can go ahead and at least get that registration process started shortly after passing the threshold. If you're working with Avalara, right, we have that integration with QuickBooks, different e-commerce platforms, what have you. So, our system's picking up on all those transactions, and we're able to alert customers via heat map. Hey, you're getting close. You're at 80% of the threshold. Hey, the state just turned to bright orange. You actually passed the threshold, and it's your cue to register, which, then that process is, not fun depending on the state. Again, like with most things, tax compliance related. So you're, filling out forms and paperwork to get registered with the state. That's another thing that, Avalara can take off your plate, and we can expedite that process for you. And then from there, it's like, hey, let's make sure we're collecting accurately based on the specific jurisdiction that our customer's in. Yes, there are some states that are simpler than others that have one tax rate. Like, I think off the top of my head, what it's like, I think New Jersey, Mass, or a couple of those states where it's just, one tax rate, one jurisdiction. But most are going to have hundreds, if not 1,000 plus boundaries or taxing jurisdictions, that you're going to have to collect based on where that ship to, or that destination or user is located, right? So
where is that heat map? I'm looking for it actually on our Avatax.
So it should be right there on your dashboard.
Let me share my screen. You can maybe tell me.
Okay.
Let's see here.
And I actually have a screenshot. Sometimes, like, it doesn't pull up for some. I mean, it's a standard feature, so it's not like, hey, you have to have the premium version of Avatax to have it. Yeah. So it looks like So it should be right there where it says economic thresholds, and I can.
Yeah. When I did click on that, it takes me to another tab that shows me about the thresholds, but doesn't necessarily talk about my thresholds. I probably need to finish,
and that may be, Dan,
thing.
just because you're already registered everywhere where you have something that would register towards the Nexus threshold. So, and if not,
well, we're only registered in 3 states, so it shouldn't be. Yeah, that's what I liked about the heat map is that it will keep us on top of those things as we get close to. So basically, what Travis is describing is there's a map of the United States, and then as we get close to meeting the economic threshold, so we don't have to keep on top of these things. It'll just basically give us a dashboard of like, okay, we're close to it. We need to start registering, and you'll get emails. Avatax will email you when you're getting close to that threshold, so that you're okay. We need to start getting our ducks in a row.
Yeah, for sure. And I went ahead and shared my demo account. Dan, can everyone see this now?
Yep.
Okay, great. Yeah. So we need to update it so we have an example where you're close, but there'll actually be a yellow color once you're 80%. So let's say you're 80K into the 100K in sales, or you're at whatever it is, 160 out of 200 transactions. I don't know if my percentage is right on that one, but it would turn a yellow color once you're at 80% of whatever that threshold is, and then a bright orange. And then it even has in here like, hey, here's the next steps. Check with a tax professional. It's like, hey, just make sure you in fact did trigger the threshold. You don't have a bunch of exempt sales or something that the state doesn't include
in your setup. Yeah.
Yep. And then step number 2, get registered, which again we can help with, and then add new places, which is really just turning on tax calculation. So, if you're just using QuickBooks with no Avatax plugin, you're manually, updating those rates and boundaries and tax
painful. Codes. I've done it.
Yeah.
I had a customer that was selling seeds, and they were in South Carolina, and they would occasionally cross the border. They were near North Carolina. And so we had to set up, and this is, years and years ago, and it was just one state, and I helped her set up every single zip code in every single county and every single city. And it was painful. And then every time there was an update and a notice, we had to go into that table and update that somebody now has 1% more. And I mean, it's a lot of work.
Yep.
And that was just for one state.
And the thing is, there's no value, to the business owner to collect and remit that, right? I mean, it's just a,
overhead.
It's a requirement of doing business, but there's no value. They don't make any money off of that. They don't make any. It's just time away from their business.
You don't get a prize. You don't get a prize for doing it correct. Nobody gives you anything. You don't get a trophy.
Only
or a
penalties
back,
when you don't.
Well, wait, you get the early. Sometimes you get the early sales tax discount. It's a teeny weeny amount, but
early filing discount. There you go. There's the silver lining, Carrie. But yeah, you definitely get penalized.
Well, they had to pay me way more than that sales tax discount to set it up and then maintain it. I mean, between me and the admin person, there's a lot of money into that one table for one state. So, yeah, and they're still doing it, but I'm not helping them. So good luck with that.
You tapped out.
Yeah, I was like, done. So they outgrew me, but so they're still manually doing it. It's crazy. But
Travis, do you have any resources for people who might be seeing this? Like, okay, like let's just make sure that that I'm in. So you've got that Nexus, type of thing.
Yep.
But do you have something that might be about like tax compliance in the state that I'm in?
Yeah, so I have a great Nexus guide that's in our resource center that I just dropped in there to you. A lot of other great that I just dropped in the chat there. And and we have a lot of other great resources in there, as far as like specific laws by state and things like that. You may want to reach out to Avalara. I mean, we do offer a tax research and consulting service where, we have all of that, basically a tax research tool where we have all those answers. Think about like almost like a Wikipedia meets tax compliance and tax laws, and both letter ruling and like easy to understand. So where we have our tax engine that will, you can bolt on to QuickBooks or your e-commerce, things like that, to calculate accurately in real time. If it's more just like, hey, we have questions on different rules or different taxability of our products and services from state to state, things like that. That's a great way. But yeah, I mean, if somebody clicks on that link for Nexus, it gets into laws by state on economic nexus or physical presence. And then we have a lot of other great resources, probably blogs and things like that. If maybe you're curious how services are taxed from state to state, we have a lot of great resources on things like that too.
All right, so we'll put a bow on the where do you sell conversation here. So next week, Travis, assuming you're not in Mexico this time, we'll have you back, and we'll talk about some of the more interesting situations, like where does Hershey with almonds fit into? Is it a food? Is it a candy type of situation? So we'll talk about some of the unique scenarios when it comes to sales tax. So we should hopefully have a little bit more fun with sales tax next
Bring
week.
your candy
So
bar.
exactly. So thanks for joining us, and we hope you all have a great week. And I'll get out of this warm
Sauna.
Yeah, go get you some fresh air, Dan, please.
All right.
You're looking kind of sweaty there.
All right. Have a great day.
Have a great
right.
week, everyone. Thanks, Travis.